Evening. I think we can start. It's a summer meetup, and I can see that has an effect, as every year, slightly on the numbers, because some people are not coding but going outside and sitting in the sun, which is a terrible sin. But never mind. So this evening for the meetup, we have a discussion related to funding, and actually, this is something that TechHub has been pushing for a while. In fact, in the room up there in the back, we met the Minister for Economics about a year ago to push an idea to try and get early stage startups easier funding options to bridge the gap from, especially from accelerator programs in their early days to get their first rounds of VC funding. And this idea has been going back and forth in different directions, and our friends at Garanti Sagentur, the guarantee agency, who help support this event every time, thank you. They also came up with a method for doing this faster than going through the cabinet of ministers, which would mean we'd still be talking about this probably 2 or 3 years from now, if that. So the method was to bring in Imprimatur, which has been around in the market for a while, and extend their contract to provide some soft loans. So Yanis is going to be here to talk about what the effect is of this, but we hope it's going to be a program that helps startups from Latvia fund more easily, grow, and make it further more often, so that we have the Skype success from Latvia that we're looking for. So I'll hand it over to you, Yanis.
Good evening. My name is Jānis Jānovics. I'm representing company Imprimatur Capital. So firstly, I'll tell a little bit about our company, and then I'll talk about the nice new funding instrument that already Andris mentioned. So the company here in Latvia has been founded by an early stage investment company from London and the local management team, which essentially is my colleague Toby Moore and I. We've been managing 2 early stage funds since mid 2010. We have 2 funds once earlier called the seed fund, where we invest smallish monies starting from, say, 20,000 euros up to 200,000, which is a maximum. We're looking for early stage technology, so we're looking for strong IP and great, nice ideas. I'll talk about what we are interested in a little bit later. This funding is for companies which might not have even a product or a prototype yet. They might not have customers, etc. So we are very early. The other fund, which is called a venture fund, that's a little bit different. We invest a little bit larger monies from that one, and we're going to go up to 600,000 euros. The key difference between the funds is that for the venture fund, we are looking for the commercial proof. So in the seed fund, you might not have a commercial proof. So you have your brilliant idea or your brilliant technology, etc., and you're looking for proof of concept. So for the other fund, we want this proof of concept to already to be accomplished, and so you have the first willing customers that we can check and talk to, or you have already some buying customers. You might have some revenue. So that's the key difference. We've done 12 seed investments, and out of these 12, 3 have gone into venture fund. We'll be actively working through this year and also for the next year, investing in many more. So if you are interested, then yeah, please come and talk to us and contact us. But today I'll now talk more about the new funding instrument, which is called pre-seed. And I would say this is a really beautiful instrument if you are a young startup company. So as Andris said, then the history was that Andris talked to minister and other people in the ministry and talked about the need that there's really the for the young startups, there's a big problem when they go through some accelerator programs or they're very early, and there's actually nobody willing to fund them. And then the bad situation is that either they fail, or some sort of other funding vehicles take them away to other places. So and there's nothing here really for, especially for internet and IT startups. So out of this then came idea that we could be managing an instrument, and we've been granted 1.8 million for this instrument. What we are interested in, so it's a whole lot of things, including internet, IT, which is all things of software, platforms, portals, things like that. Also other sciences like life sciences, electronics, materials, energy, various physics areas, nanotechnology. We look into new energy sectors. We look into things like batteries, stuff like that. So it's a whole lot of new technology that can be valuable for the market. In this program, we would give a clear preference towards graduates of accelerator program. So if you have graduated some good and recognized accelerator program, you can come to us and we'll look very openly to you. Really what we would like to see here is that you still are going to be continuing sort of the same idea that you had in the accelerator, and you will have more or less the same team. So if you just you had a team of 4 and that's just you and you want to do something else, of course we wouldn't give you just money like that. So we want sort of this project to continue and sort of. For the sources, yes, the TechHub is one of the key sources that we see for this instrument, and there are also other sources like commercialization reactor and others like universities, incubators, research institutes, etc. Currently, we already have the first few applicants, and yeah, I'm happy to say that some of these applicants come from TechHub. So we hope that we can probably finalize the first one by the end of June. So let's see if we manage. So what are the terms, and why did I say this is a beautiful thing? So it's a loan up to 50,000 euros. We are not expecting you to come and ask just for 10, because that would be easier to get the money. So we're not going to evaluate on how much money you're asking. We would really look at is this an interesting idea, etc. So it's more or less instrument of 50 or close to 50. There's an interest rate that you need to pay. It's a 6% annual. It's going to be charged annually by the end of the year. So if you take 50,000 now, then your first payment is in a year of 3,000 euros. The loan term is up to 8 years, and we would give a grace of 4 years. Means that for the first 4 years you would be just paying the interest, and after that then you just start repaying. For a startup, then if you don't really succeed in the 4 years, it's very unlikely that you might succeed later. Especially with internet and IT startups, you need to become something within the 4 years, I think. So if somebody wants to argue against that, then please, but that's my opinion. There's no collateral, so you don't have to pledge your house, etc. So you don't have to pledge anything. It's very beautiful in that sense. And there are no conversion rights. So in this very early stage, when usually if you go to some angel investor, and it might or might not be a case, but in some cases they say, I want to control things, or I want really a large stake, and I'm giving you like a 20 or 50 or whatever sort of a smallish size investment. And then you actually sacrifice quite a lot of shares for a sort of a little money and just because you're in an early stage and nobody else wants to fund you. So this funding is not going to dilute you. And whenever you grow something and raise $1 million and you can repay and you repay the 50, then you haven't been diluted by this. And there's no tranching. There's sort of to make it easier, and 50 is not a large sum, so we would pay this usually as one tranche. Though we would like to see the monthly progress reports, and there are some guidelines that you can or you cannot spend the money on, but I'll talk about that on the next slide. There's some additional repayment triggers, and the triggers is that either you raise money from an external investor or investors, and in such a case, if you raise, say, $1 million, which means that repaying a 50 probably is not a big problem anymore. So if you raise more than 20 times the loan amount or outstanding loan amount, then you need to pay out of this money raised. Or either you start earning money, so you have profits, then you need to pay 20% of basically of your profit the next year, which again sort of probably you can afford if you are into profits and you're making money and you have a positive cash flow. Yeah. What the funding would be meant for and what we really expect you to be doing. So yeah, first for very early ones, let's say it's defining the business model or finding the right business model by trying and going to talking to customers, consultants, advisors, etc. It's doing market research, understanding what's in the market and how to approach the market, what's your go-to-market strategy, etc. It's for development. You develop your prototype or you develop your product, meaning that you can use the developer's salary for developer salaries or outsource development. You can expand your team by hiring people, hiring consultants. And yeah, for probably not that sort of internet companies, and it's also for defining your IP strategy or either freedom to operate searches or patenting patent searches. And the last but not the least, it's also for the fundraising. That's quite a key element. So I like to say, sort of, whenever you raise the money, you should be starting to look for the next funding, because finding the money when you need it tomorrow and you're out of the money, then it's quite hard sometimes. So fundraising probably is also activity that you could be doing. There are listed some things. It's not that we can fund only these things with this loan. It could be whole other things that that money can be used for. I mean, that I don't really include it, but it could be administration and accounting if you need to pay accountant, etc. What we wouldn't really like to see then in the applications is that you are buying a BMW. So we're not gonna fund that, or of course anything like buying property, real estate, sort of, or buying up companies. So it's not accepted and it's not allowed. Yeah, you can buy computers if you need, or servers, or sort of pay for the hosting services or whatever. Yeah. So that's normal. I mean, whatever would be regarded as normal activity for an IT startup, that's okay. And not okay is like spending money unwisely. With this activity, we plan to have at least or around 30 loans like this. Funding would be available till there's money left, but not later than end of 2015. Actually, we have seen already quite a good activity. There's some applicants already, and we are processing. And really, I'm invite everyone who is interested to apply. We will try to limit our process to 30 days. So we will try to review and give an answer as soon as possible. We don't want this to be a lengthy due diligence process. We want to review this fast. We want to meet you, talk to you, then if we like this, then we give you an application that you need to fill in. We talk to our people, to our experts, and then we put this on an investment committee, and then off it goes. With the first ones, we sort of feel that we would fit into 30-day limit. Yeah, these are my contacts. Yeah, so you can take them down. So feel free to contact me, call me, or mail me if you are interested. And of course, your questions are welcome. Happy to answer. Yeah, yes, please.
So, the directors of the company guarantee the money. What happens in the event that the startup fails or one of the directors leave or all the directors leave?
Yeah, so these things happen. There's no collateral. So unless there is sort of something which we can call like unwillful misconduct or I mean that fraud, then otherwise, then yeah, it just company liability. Yes. Yes, please.
How strong the requirement is regarding the IP, the patents? It should be absolutely something unique, or just a simple portal with a business model also is acceptable to you?
More or less, we want to see the ID is sort of interesting and unique. We don't really look that there would be patents. There might be patents and might not. So with consumer internet or internet projects, we don't really expect any IP like that. So I mean that if you are doing a replica of TVNet portal, then probably not for us. But if you're doing something novel on the internet, then why not? Yes, please.
The business there for you, I mean, 6% is not worth it.
Yes.
Very fair.
Yeah. Yeah. So the question is why we are doing this, and we presented already once at TechHub, and even more precise was why we as venture capitalists are doing this. So the short answer why we are doing this, or why Latvian Guarantee Agency would like to do this, is to support the startup community and startups to grow into something bigger and more valuable. And probably you'll be paying some taxes, and the money will return to the state. Yeah, it might happen or might not. Of course, one other good thing about this is large extent this is EU money. So we are spending EU money on the good thing rather than somebody building a private villa somewhere and saying that it's a guest house. I think this is a good activity. I would really say that this is much more valuable. Why we as venture capitalists are doing this? Yeah, really, there's no upside sort of for us at 6%, which again would be paid back to Guarantee Agency. The good thing that we see is that we see that there's a potential pipeline for us. So actually the good projects, we would see how they're working and what's the progress, and possibly then we could offer the further investments, which are already either convertibles. Actually, we wouldn't have the first hand, but you see, once you start working with the people, then it's quite likely that you would get to know us and we would get to know you, and that would be actually easier. And lastly, actually, we also are happy to support startup community on this thing, because this is what we do. This is what we like to do. We work with technologies and startups every day, so we didn't see a reason why not to support this. Yes, we will require. So that's one of the key requirements, that the startups registered in in Latvia. You might have activities in other places as well. So part of activities can be in Latvia and part of activities can be elsewhere. You can have a daughter company registered in UK and the mother company in Latvia, and then part of the activity could be in UK, and you might be giving it that as an address and contacts for your potential customers, your UK address, etc. So I understand the problem that it's quite hard for a Latvian startup to sell to some of the Western companies or even to States. Probably you need a company in Silicon Valley rather than here. But I think that's something that we can solve. But yes, there is a requirement at least that you have the mother company registered here in Latvia.
Any more questions?
Yeah, thank you.
So